Good evening to one and all present here. Yeah, am I audible? Sukanya ma'am?
Yes, you are audible, Harini.
Let us wait for 2 more minutes.
Okay.
Yes, ma'am. Yes, ma'am, you can start.
Thank you, Harini. Am I audible?
Yes, ma'am, you are audible.
Okay. Thank you. Good evening to all of you. I am glad to invite all for this webinar. We are all gathered here for a very important thing. This is very important and this cannot be ignored if we want to capture all the opportunities that is available to us as a trading community. Now, this is, as all of you would accept, this is a technologically driven era, more so in the post-COVID session, where technology has given wide opportunities for people to get engaged, to earn, to reach one another, for countries and the world to grow in a more integrated manner. And these are being actually made use by all the exchanges, the regulators, everyone in the positive note, in the best interest of the traders and the investors. Now, this webinar, as you would have read in the topic, is about the growth that the options segment has seen in the multi-commodities exchange. This webinar is a joint effort of Tradeplus Online and MCX. And I thank Mr. Ashutosh Vashisht, who is with us. He is the Assistant Vice President of the Training and Education Department of Multi-Commodities Exchange. We have Mr. Rajesh, the Tamil Nadu head, and we have Suresh from MCX. Thanks for joining us. This technology, as I was talking, is being rightly tamed by MCX to provide products time and again in the best interest of the traders and the investors. Now, this is time for us to understand whatever the efforts that's been made by the MCX so that this could be rightly utilized by the end users who are none other than our clients in the right sense so that it could benefit a lot for them. So without taking much time, I would like to give this handover this session. And before that, just one word about Tradeplus. As you all would be aware, Tradeplus Online is the intermediary which enables you to open your trading account and trade in all segments including the commodities. And trading with Tradeplus is being highly cost competitive and effective. So you have the flat schemes like 99 rupees per month, 499 rupees per month is your brokerage. So if you're looking for an opportunity, you can look at Tradeplus. And this is one of our initiative where we would like to actually bring about the efforts that's been put in by the commodities exchange in front of the investors, because all those are aimed to benefit them. So we want to bring this to the world, to the people trading community, so that it is very well understood and they use it for the best benefit of this. So thank you for joining us. And And I would hand over this session now to Mr. Ashutosh, who would be taking us through all the opportunities that is available and the growth that is the MCX has seen in a tremendous fashion. So over to you, Mr. Ashutosh.
Thank you. Thank you so much, Sukanya ji. Just before I begin there, I wanted your understanding as, should I take the session in English or in Hindi? Because my, understanding was that it has to be a mix of, both the languages.
Yeah, it would be better if it is a mix because we have people from all the region of the country. So it would be good if it can be a mix.
Okay. And is the PPT, visible to all of you?
Yeah, we can see.
Yeah, you can see, right? Okay.
Yeah.
Thank you. Thank you so much.
Welcome.
Okay. Right. So I'll begin. My name is Ashutosh Vashisht, and as Sukanya ji has already said, and I'm the AVP of multi-commodity exchange there, where I am part of the training and education team. And today, आज का जो session है, it is basically going to focus upon the options contract which are traded on multi-commodity exchange. तो आज का जो सेशन है वो मैं आपको जानकारी दूंगा जो भी हमारे ऑप्शंस के कॉन्ट्रैक्ट हैं जो एमसीएक्स में ट्रेड होते हैं, व्हाट आर दोस कॉन्ट्रैक्ट्स, व्हाट आर देयर मेजर फीचर्स देयर एज पर द कॉन्ट्रैक्ट स्पेसिफिकेशन, उनके कॉन्ट्रैक्ट स्पेसिफिकेशन में ट्रेडिंग के जो डिटेल्स है वो क्या हैं, इसके अलावा वो सेटल कैसे होते हैं, बिकॉज दैट इज वेरी इंपॉर्टेंट फॉर दोज पीपल, वो लोग जो हैं जो ऑलरेडी दे आर ट्रेडिंग इन इक्विटी मार्केट्स and they are trading in FNO section. अगर आप इक्विटीज में FNO सेक्शन में ऑलरेडी ट्रेड कर रहे हो, तो then the way the options are settled in commodities are slightly different. So the process is a bit different, the procedure is a bit different. So that is something that you'll have to understand there, how it is different in options, right? And later on, I will also tell you as to what is the devolvement process in options, and how those contracts, if you want delivery there, you can also take delivery, right? So first of all, as Sukanya ji already told that we have seen the growth of commodities market there a lot over the last 15-16 years. And in options there, we have seen a lot of growth there in the last 2 or 3 years. Last 2-3 साल में जो है options के जो contract हैं उनको उनमें trading में काफी interest generate हुआ है. And because of that, हमने जो है based on the success of options contract, we have started trading in a lot of commodities in options. So just last week, पिछले हफ्ते जो है we launched the contract for natural gas का हमने contract launch किया था. उससे पहले जो है just last month we also started trading in options contract of nickel, जो metal है, base metals में nickel का contract we started trading, and maybe in the coming months there we will also start trading in options on these indices as well. So you will all be aware that we also have started trading in index there. We have introduced so many new products. इतने सारे नए products आए हैं, तो उसमें index में भी हमने trading में launch किया है. तो bull dex है, metal dex है, and there is energy index as well. So उस पे जो है अभी currently we have got the futures contract that are trading. अभी उसमें सिर्फ futures contract में trade होता है. लेकिन हमारी expectation है कि once we get the approval from the market regulator, which is SEBI, तो हम जो है index में भी जो है options आगे लेके आ सकते हैं. ठीक है. तो important thing first of all कि over the last आपने देखा होगा over the last 2 months options trading volume have increased a lot. In fact सिर्फ last week में, only last week there we had a turnover of close to 22,000 crores only in options, and a lot of that in crude oil and to some extent in natural gas as well, and that was almost equivalent there to our turnover in futures contract. So options contract TV, and that's also a very good sign there, because if you look at most of the international markets there, where both options and futures, they have matured as a product, as a financial market asset class, they have matured out there. Options trading there is kind of done much more, because option is very less risky. It takes care of your volatility. एक तो जो आपका volatility होता है, जो price fluctuation बहुत ज़्यादा ऊपर और नीचे होता है, it takes care of that, right? And if you are a buyer of an option contract, अगर आप buy करते हैं, then your this risk is going to be only restricted to the premium that you pay. ठीक है? Because options के contract में क्या होता है? Unlike a futures contract, in futures contract what happens? Let us say I will take the example of a gold contract which is going to expire on the 4th of February, the current contract of gold. ठीक है? जो अभी gold का जो contract है वो 4th of February को expire हो रहा है. तो फ्यूचर्स में क्या है, इफ यू हैव बॉट द कॉन्ट्रैक्ट टुडे, you will have to sell the contract there by the 4th of February, right? Or if you have sold the contract today, then you'll have to sell the then you'll have to buy back the contract there by the 4th of February. And whatever is going to be the difference there, that will be your profit or loss, right? So that is the thing in case of a futures contract. The futures ke contract mein, both the buyer and seller, they are obligated to fulfill the terms and conditions of the contract. एक बार आपने कॉन्ट्रैक्ट में एंटर कर लिया तो बायर और सेलर दोनों जो है कॉन्ट्रैक्ट में, उनको जो है वो जो ना अपना जो ऑब्लिगेशन है वो कंप्लीट करना पड़ेगा. सो इफ यू हैव बॉट, यू विल हैव टू स्क्वेयर इट ऑफ बाय सेलिंग, एंड इफ यू हैव सोल्ड, यू हैव टू स्क्वेयर इट ऑफ बाय बाइंग बैक, व्हिच राइट does not happen necessarily in case of an options contract. In case of a futures contract, what happens is that if the price goes adverse, let's say you have bought but the price has really gone down a lot, right? Then if you have to sell, you'll have to sell it at a lower price, right? In case of a futures contract, and whatever is going to be the loss, you'll have to bear it, right? But in case of option, what happens is that you're not buying the contract. Unlike a futures contract, you're not buying an options contract. Options में आप contract buy नहीं कर रहे हो, you are just buying a right to buy something, or you are buying a right to sell something. तो आप सिर्फ एक राइट दे रहे हो, आप जो ना एक हक जो है, एक अधिकार, उसको बाय कर रहे हो कि मैं आपको इन द फ्यूचर डे I will sell a certain commodity to you at a price that I determine. Okay, so you are just buying a right. You are not, having any obligation. Unlike a futures contract where both buyers and sellers, they have an obligation. In case of an option contract, there the buyer does not have an obligation. Okay, so I will give you a very layman kind of example there. First of all, to begin, एक बहुत layman kind का example दे रहा हूँ. Let us say that you are into trading in garments. Okay, आप garments में trade कर रहे हैं. You suddenly get a call from one of your buyer, one of your partner in US. US से उसने आपको call किया. He tells that, well, I'm going to come to India tomorrow. There is a 50-50% chance. वो आपको बोलता है कि 50-50% chance मेरे पास है कि I will come to India tomorrow. Okay, now he may come or he might not come, right? You are kind of a bit puzzled. You go to the when he, but then the thing is, if he comes to India tomorrow, अगर वो कल India आता है, right? Then what is going to happen? You will have to arrange for a hotel accommodation for him. Hotel के लिए आप उसके लिए वो accommodation you will have to arrange. But then what if he does not turn up, right? You go to the hotel, you ask the receptionist there that please, can I book? What is the tariff of the room for a day? एक जो ना एक दिन का पूरा tariff कितना है? She says, sir, it is 5,000 rupees. Now the thing is that if you pay 5,000 rupees, right? Yes, sir, you can post the queries there. I've got one query. Sir, you can post the queries. Once I'm through with my session, जब मेरा session खत्म होगा, उसके बाद I will take all the questions there. The last 15-20 minutes I'll keep for that. Yeah. Okay. So I was telling that I was giving the example that okay, you go to the receptionist there, you ask her what is the tariff for the hotels. She says, sir, it is 5,000 rupees. 5,000 rupees का पूरा एक दिन का booking का है hotel का. Now if you book the hotel, but what if the client does not turn up, right? Your entire 5,000 rupees is going to be gone. That's a loss for you, right? So what you tell to the receptionist, आप अपने receptionist को क्या कहोगे sir कि well do one thing, block the room for the next 2 hours, right? अगले 2 घंटे वो रूम ब्लॉक कर दो, आप उस रूम को रिजर्व मत करो. You just block the room for the next 2 hours. In the next 2 hours, I'll get the confirmation from my client whether he's going to come up today or not. And in order to block that room, please take 500 rupees as token right now. Okay? Now what he has done out here, तो मतलब वो रूम ब्लॉक करने के लिए आप उसको रिजर्व मत करो, बट आप जो ना 500 rupees टोकन अभी दे लो. ठीक है, अभी ले लो. After 2 hours, right? If I come to know that the client has confirmed that he is going to come, I will pay the balance of 4,500 rupees and you can go ahead and do the book, right? If he does not come, then what is going to happen? You take this 500 rupees as token that I have given you. I'm not going to do anything else. ठीक है, तो क्या होगा, या अगर वो क्लाइंट का कंफर्मेशन हो गया कि अगले 2 घंटे में कि मैं कल यूएस से आ रहा हूं, तो मैं बाकी जो है 4,500 rupees उसको बैलेंस दे दूंगा and the room is going to be booked for the entire day. But if he does not turn up, then what is going to happen? ये जो 500 रुपए मैंने आपको जो अभी दिए हैं, वो आप ले लेना, मैं और कुछ नहीं आगे करूंगा. I will not get the room book. You take this token money away, 500 rupees. So now what has this person done out here? He has protected himself both ways, right? First of all, what he has done is that he has ensured that, well, by blocking the room for the next 2 hours, well, he will get the confirmation and then he will pay the balance. If the client does not turn up there, he will not lose the entire 5,000 rupees, right? He will lose 500 rupees, but then losing 500 rupees is preferred over losing 5,000 or not? Yes, right? तो वही इस केस में होगा. इस केस में क्या किया क्लाइंट ने, अपने आप को दोनों तरफ से बचा लिया, राइट? अगर उसका क्लाइंट जो है यूएस से आता है, then he will pay the balance of 4,500 and the room is booked for the day. But if he does not turn up, he will just tell to the receptionist, जो मैंने आपको 2 घंटे के लिए रूम ब्लॉक करने के लिए 500 रुपए दिए थे, ये आप ले लो, उसके अलावा मैं कुछ नहीं. सो उसने अपना रिस्क जो है वो 5,000 की जगह सिर्फ 500 कर लिया, राइट? सो 90% he has been able to cover his risk out, and that is the concept of option, right? Unlike a futures contract, in futures contract there, once you enter the contract you cannot back out. But in case of an option contract के contract में आप back out कर सकते हैं. You can forfeit the term and condition of the contract. You can tell not to exercise the contract, right? That is what you can do. And here obviously the risk is going to be very, very less, as I told. So now I will come to the major slides there, because this explanation was very important there for me to come to the next couple of slides. Right. So what we are talking about today is options on futures contract, right? Now, what are the contracts that we are currently trading on in MCX? MCX में अभी हम कौन से contracts में trade कर रहे हैं, वो है options on futures. ठीक है? मतलब जो options के जो contract हैं, उसका जो underlying क्या है? The underlying of those contracts are the futures contract which are already traded there in that particular commodity. So options out here is based on the futures contract. तो जो कॉन्ट्रैक्ट आपके होंगे वो ऑप्शंस ऑन फ्यूचर्स पे होंगे. सो लेट अस टेक एन एग्जांपल. अगर गोल्ड का आपका कॉन्ट्रैक्ट है ऑफ ऑप्शंस ऑफ 1 kg, तो उसमें जो अंडरलाइन क्या है, जो ऑलरेडी गोल्ड का जो फ्यूचर्स का कॉन्ट्रैक्ट है जो ट्रेड हो रहा है, दैट इज द अंडरलाइन. सो इट इज बेस्ड ऑन दैट. नाउ इंपॉर्टेंट थिंग इज द ऑप्शन टर्मिनोलॉजी, बिकॉज कंपेयर टू द मार्केट देयर, राइट, the options contract there are compared to futures contract, option contract have certain terminologies. इसकी कुछ terminologies वगैरह हैं जो अलग होती हैं. तो first of all I will tell you about the moneyness of the option, okay, and how many types of options are there. So there are 2 types of option. One is a call option and the other is a put option. Okay, so what is a call option? See, in stock markets or in commodities market, you do 2 things as a trader: either you buy or you sell, right? So similarly also as well in case of options there is a buyer and there is a seller. Options में भी एक buyer है, एक seller. तो call option क्या है? It is an option to buy. ठीक है? It's a right there but not the obligation to buy a commodity in the future at a price that you determine today. मतलब आप एक contract में enter कर रहे हैं, उस commodity को buy करने के लिए you are buying a right but not the obligation. You're just buying a right to buy gold, let us say at a price of 50,000 on the 4th of February. Okay, if the price is going to be favorable, I will go ahead and I will exercise the right. अगर price favorable है तो मैं उसको right को exercise कर दूंगा. अगर price favorable नहीं है तो मैं उस right को exercise नहीं करूंगा. Futures के contract में I don't have that liberty. Okay, now let me take this example there and then explain it to you. So in case of a call option there, it is the right but not the obligation for you to buy a commodity in the future at the price determined today. So let me take an example that I get into a right to buy the gold from you at a price of 50,000 on 4th of February, and the price is determined today itself. Like say we are trading in the mid of January. Okay, so what happens in this case now? On the 4th of February, 2 things can happen. Either the price can go up or the price can come down. Okay. So if the price, let us say, goes up, अगर price जो है वो ऊपर चला जाता है, let us say on the 4th of February there, the price of gold is 55,000. Okay. Now, what is my term and condition of the call option? That I'm going to buy the right, but not the obligation to buy gold from you at a price of 50,000 on 4th of February. So 4th of February तो अब आ गई, the 4th of February has come. Now the price of gold is 55,000. So I will exercise this right of me because the price is favorable. तो मैं एक्सरसाइज करूंगा अपने राइट को क्योंकि प्राइस फेवरेबल है. व्हाई इट इज फेवरेबल? व्हाई? बिकॉज द एंटायर वर्ल्ड is going to pay 55,000 rupees to buy gold on that day. I will get the opportunity to buy the same gold only at 50,000 because I entered into this contract 1 month before. ठीक है ना? तो उस दिन पूरी दुनिया जो 55,000 रुपीज जो है वो पे करेगी गोल्ड को खरीदने के लिए, मेरे को जो है गोल्ड सिर्फ 50,000 में खरीदने को मिलेगा. तो then definitely I will be at a benefit, right? Now, if the reverse would have happened, if the price would have gone down instead of going up, then what would have happened? Let us say the price would have gone down to 45,000. अगर प्राइस 45,000 पे होता तो क्या होता? ठीक है. Then अगर ये futures contract होता, then in case of futures contract, I would have had to exercise the right? Sorry, in futures contract, I would have had to settle the contract, right? And that would have been a loss of 5,000. But in this case, what happened is that this is an options contract. Option gives me a right, but not the obligation. So I will be not obligated there to fulfill the terms and conditions. So I will back out of the contract. Okay. So I will just tell to the seller, my counterparty, that see, मैंने जो at the time of entering the option, I gave you the premium there, right? To enter into the contract, I gave you a token money. Just like in case of the hotel example, the token money was 500. So here I gave you the token money there that take this token money of 100 rupees, right? At the time of entering the contract, I will not do anything else, right? And then he will not exercise it. So here what happens is that his loss will not be more than the premium, which is 100 rupees. तो इसमें क्या हुआ इस केस में, अगर 45,000 पे जो है ना आपका प्राइस गिर गया, राइट, तो आप जो है ऑप्शंस के कॉन्ट्रैक्ट को एक्सरसाइज नहीं करोगे क्योंकि फालतू में आप 5,000 का नुकसान क्यों लो. अगर ऑप्शन के कॉन्ट्रैक्ट में आप बैकआउट करते हो तो आप बैकआउट कर सकते हो. 100 रुपीज प्रीमियम आपको सिर्फ देना है, बस वो आपने शुरू में दे दिया एट द टाइम ऑफ एंटरिंग द ऑप्शन. सो दैट इज अ कॉल ऑप्शन फॉर यू. कॉल ऑप्शन में क्या होता है, you enter into a call option, you buy a call option because आपकी जो expectation है that the underlying price is going to go up. Okay. Put option is exactly different, exactly the opposite. In case of put option, you buy a call option there to buy. In case of put option there, you buy an option, put option there because you expect that the underlying price is going to go down. Underlying का price जो है वो नीचे चला जाएगा, इसलिए आप जो ना put का option जो है वो खरीदोगे. So in case of a put option there, it is a right for you to sell. It's a right for you to sell the commodity in the future at a price that you determine today. Okay. So that is a put option, for you. So I will take the same example in case of a gold, right? I entered into an option there to which gives me a right to sell gold to you at a price of 50,000 there on the 4th of February. Now, two things can happen on the 4th of February. या तो price of gold will go up or the price of gold will go down. So let us say that the price of gold goes down there to 45,000. Then you will exercise the option. Why? Because on the same day the entire world is going to sell the gold at a price of 45,000, and then you get the opportunity to sell at 50,000, 5,000 rupees more, right? So you will exercise the option. You will benefit by 5,000 rupees. On the other hand, let's say if the price would have gone up, अगर प्राइस जो है वो ऊपर चला जाता till the level of 55,000, then what happens is that 5,000 rupees जो है, in case of futures contract you would have been at a loss, but here this is an options contract. You can back out of the contract. You can just tell to your counterparty, see, I gave you 100 rupees premium, right? You take it back. You just take it. I will not do anything, right? So that is a put option. Put option benefits you when the in the near future, when you expect that in the future the price of the commodity is going to go down. So that is how that is known as also the moneyness of the option. Moneyness होता है option का, वो that is how it is known as. So all those options there where if you exercise the option right now, अगर आप option को अभी exercise करते हो, then it will lead to profit for you. Okay, if you exercise right now, it will lead to profit for you. So that is known as in the money option. So in the money option में क्या होता है, all the current price is higher than the strike price. And put option में why? Because you expect that the price of the underlying will go up. So if the price of the underlying goes up, then you are going to benefit. So in put option there, you expect the price of the underlying is going to go down. So if the current price is lower than the strike price there, then your option is going to be in the money. अगर आपका जो current price है, that is 4th of February का price, वो strike price से जो कम है, right, then you are going to be in the money, profitable. At the money is going to be the same, no profit, no loss. So I entered into the option contract today at 50,000 पे मैंने enter किया. On the last day of the contract there, the price is also 50,000, so no profit, no loss. Then out of the money contract hai, out of the money contract is going to be not exercised at all because that is going to be loss making. तो वो कब होता है? In case of call option, अगर आपका जो current price है वो strike price से कम हो जाता है, नीचे हो जाता है, if it is lower than the strike price. और put option जो है, अगर current price जो है वो strike price से ऊपर हो जाता है, ठीक है? So that is known as in the moneyness of the option. And the other thing is that in case of an option there, you don't trade on the price. In case of futures contract, what happens is that you trade on the price of the futures contract, the price of the commodity. But in case of option contract there, you only trade there on the premium. That is the token money. ठीक है, आप सिर्फ premium पे trade करते हैं. It is the premium value there that keeps on getting changed in case of options. So in case of options there, you also have multiple strike prices. Unlike futures contract, whereby price is what you see the traders workstation, the current price is if you want to trade on that particular price or some level higher or lower, that is the price at which you trade. But in case of option there, you trade at a predetermined price, which is known as the strike price. जो strike price पे आप enter कर सकते हो उसमें, तो इसमें क्या होता है आपका कि जो strike price होते हैं, there are multiple strike price there, that are available there for trading in options there, and all will have a different premium altogether. Okay, so let me take an example of the same gold. Gold, we decided that we are going to buy or sell gold at 50,000. Okay, so let us say that first of all, at the money price is going to be determined. Once that there is going to be one strike price which is going to be equal there to the that day's settlement price. So let us say that आज का जो settlement price था of gold, that is 50,025. Okay, so as per the gold contracts, the at the money price should be the nearest 100th level. जो 100th level का जो है 50,025, उसके सबसे nearest level कौन सा होगा? So the nearest level of 50,025 is how much? It is 50,000. The nearest level of 50,075 would be how much? 50,100. So if the nearest level of 50,025 is 50,000, so that is your at the money strike price. Okay, and then usse there are 15 strike prices above and then 15 strike prices below that. 15 strike price usse upar और 15 strike price usse नीचे जो हैं वो available होंगे for the purpose of trading at a interval of 100 rupees each. तो 100 rupees के interval के बाद तो आपके पास 50,000, 50,100, 50,200 level, 50,300 level up till 51,100. 51,500, and then 15 strike prices below the 50,000 level, that is 49,900, 49,800 till 48,500. So that is going to be the options strike price. So there are 31 strike prices there which will be available at a given point of time for both call option as well as put option. तो call option के case में जो है obviously as I told you, if the underlying price goes up, then the premium will go up. Why? Because if the underlying price is increasing, then the seller will also charge a more premium for you because your profit also keeps on increasing. आपका profit भी जो है वो बढ़ता जा रहा है, इसलिए आपका जो है वो premium भी जो है ना वो बढ़ेगा. और अगर जो है underlying का price वो नीचे गिर रहा है, तो आपका जो put option है उसका price जो ना premium जो है वो बढ़ता जाएगा. So that will keep on increasing, and the call option premium will keep on decreasing. So that is what happens there. In case of call option, let us say that if the strike price is 50,000 and the current price is 55,000, so what is your profit that you make? जो profit आप बनाते हो वो कितना है? That is 5,000 rupees. If the strike price would have been 51,000 there, the profit would have been how much? 55,000 minus 51,000, that is only 4,000 rupees, right? So obviously, jo at a strike price of 51,000, the premium that the seller is going to charge will be less than at 50,000, because at 50,000 the profit range is going to be higher. Similarly, if the strike price would have been 48,000, अगर strike price 48,000 होता, तो profit का range कितना होता? 55,000 minus 48, only 7,000. That is 7,000. So at 48,000, the premium would have been much more, right? Similarly, in case of put option there, it is the reverse. So in case of call option, if the strike price is lower, the premium is going to be higher because आपका जो profit है, the profit is going to be much higher. If on the other hand there, in case of put option there, the profit is going to be much higher if your strike prices are on a higher side. So that is how it happens. And within options there are one more concept which is close to the money. So I told you that at the money price is 50,000. So close to the money means those option contracts which are very close to expiring, right? Or which are so not close to expiring, close to becoming in the money contracts. So wo hai two levels above 50,000 and two levels below 50,000. So 51,100, 51,200, and 49,900 and 49,800. So there are multiple strike price and expiration date. As I told you that जो options के contract हैं that are similar, that are based on your futures contract. तो futures contract से पहले जो है options के contract खत्म हो जाएंगे. They will expire. So for example, if the gold contract which is going to end on the 4th of February, right? Its tender period and delivery period will be 5 days before. उसका tender period, delivery period 5 दिन पहले होगा. It will be, let us say, on the 29th of January. So calculate 3 days backward from the 29th of January. The corresponding gold contract, जो उसका gold का contract होगा, options का, that will expire 29th, 28th, 27th, 26th by 25th of January. Right? So that is how these contracts they are interlinked. So option का contract जो है, it will expire 3 days there for gold, for silver, and for the metals contract it will expire 3 days there before the corresponding futures contract, and for crude oil and natural gas it will expire 2 days before. Right? So let me just take an example. Let's say that if the underlying value is on 15th May Mr. Z he buys a call option on 31st December, contract strike price is 45,000 by paying rupees 200 premium. ठीक है, तो call option उसने खरीदा, call option उसने strike price is 45,000. On 31st July the underlying price is 50,000. So will he exercise the option? Yes, he will exercise the option. Why? Because उस दिन the entire world is going to pay 50,000 there to buy gold. He will only have to pay 45,000. And his profit is 5,000 minus the premium of 200 that he pays, that is 4,800. And on 10 September, the underlying price is 42,000. Will he then exercise? No, he will not. Why? Because he will get to buy the gold in the market at 42,000. Why will he pay 45,000? If this would have been a futures contract, अगर ये futures का contract होता, then definitely he would have had to settle and he would have had a loss of 3,000. But this is an option contract, so he will back out. Similarly, in case of this a put option, let's say on 15th May, Mr. AZ he buys a put option on 31st December. Contract strike is 30,000 by paying premium of 150 rupees. So he buys at 30,000. Now it's a put option. Put option का benefit करता है when the underlying price goes down. So let's say if the underlying price is 20,000, right? So he will exercise the option because he will get a profit of 10,000 minus 150. On the other hand, if the reverse would have happened, if the price would have gone up to 35,000, he would not have exercised. वो exercise नहीं करता option. On 31st December, underlying price is 25,000. अगर 25,000 है, then again he will exercise. Why? Because it is still below 30,000. Right? So that is the moneyness of an option. Now comes to a very important part there of the options contract that are traded there in the exchange. जो exchange में जो trade होते हैं. Here what happens is that on the expiry day of the contract, the contract is not going to be settled in cash there. Okay, the contract is going to get devolved. It will get converted. आपका जो contract है वो convert हो जाएगा, वो devolved हो जाएगा futures position. ठीक है, it will get converted into a futures contract. So what happens is that जो भी आपका long call है, long means buy. If you are buying a call option, why do you buy a call option? Because you expect that the underlying price is going to go up, right? So you are going to go long on futures. So आप futures पे you will have a buying position. If you are going to long a put, if you are going to अगर आप put option को खरीदते हो, आप put option तब खरीदते हो जब आप expect करते हो कि market का price जो है वो नीचे चला जाएगा. Then you are going to short a futures contract. It will be equivalent to selling a futures position. Similarly, if you are going to short a call option, अगर आप call options को बेचते हो, तो that means you expect the market price is going to go down, right? If the market price is going to go down, then it will get converted into a selling position in futures. And in case of a put option there, it will be the opposite. So that is one difference there from the equity market there or other markets that you have in case of options there. In case of commodities market, your options contract, they will get devolved, they will get converted into futures position. Then after that, futures positions, the future rule will apply. Then there are two, options for you. Either you will, have your, futures. You have the option there of getting the contract settled there in cash, which will be the difference between your underlying price, the settlement price, and your, strike price. Or if you want to take delivery there, you can take delivery as well. So, this is the exercise mechanism there. So first of all in the money contracts means, all those contracts, what happens is that in India, currently we only trade in European options. There are basically two kind of options. One is a European option and the other is a American option. एक European option होता है, दूसरा American option होता है. तो European option में क्या होता है आपका कि European option में the option will only get exercised on the last day, right? सिर्फ आखिरी दिन पे जो ना ऑप्शन जो ना वो एक्सरसाइज होता है. और जो अमेरिकन ऑप्शन होता है, अमेरिकन ऑप्शन जो है वो it can get exercised on any of the days, right? But in India currently we only have European options which will only get exercised on the last. So last day there, then obviously you will have to determine what is the in the money option, at the money option, or out of the money option. कौन से options are profitable, which options are not profitable, right? So first of all, out of the money options, those options there where the buyer is not going to exercise, they will get, go worthless. Nobody is going to exercise. That is one. The in the money option there, all these in the money option there, they will get automatically exercised. वो अपने आप खुद exercise हो जाएंगे unless until there, the option holder, he tells that, gives an explicit instruction to the traders workstation that, I want to not exercise my option, right? If you don't do that, your option will get automatically exercised. At the money option, there, they will only be exercised there. For example, I took the example of gold. 50,000 there was at the money. वो at the money का option था. So 50,000 there का जो strike price है, they will only get exercised there if you give explicit instruction there to the exchange. And close to the money option there, close to the money option means those two strike prices above ATM and two strike prices below ATM, they will also get exercised in the same way. Only if you have given explicit instruction there to the option holder. Now, this is only for the existing contract, this exercise mechanism. Abhi, recently, just about 1 or 2 weeks back, SEBI ने एक guideline issue करी थी. They issued a guideline whereby SEBI told that going forward, there is going to be no concept of ATM, there is going to be no concept of CTM, and all the fresh contracts, जो भी अभी नए fresh contracts होंगे, वो तभी exercise, वो they will not consider CTM. They will only be ITM or OTM. Okay, so even the CTM contracts there, वो भी they will become OTM contracts out of the company contracts going forward. So this is the mechanism there, how we determine there what is the at the money price. कैसे at the money price determine होता है? So this is the nearest hundredth level of the settlement price, final settlement price. So let us say that अगर settlement price is 45,010, what is the nearest hundredth level? That is 45,000. So two levels above, that is 45,100 and 45,200, and two levels below, 44,900 and 44,800, they become the CTM. ये CTM बन जाएगी. And if the strike price is 45,060, 45,060 का nearest, what is the nearest hundredth level? That is 45,100. So two levels below and two levels above, that become your CTM. And if it is 45,050, if it is exactly middle, then what is going to happen? Only two strike prices above and below this particular level, they will become your CTM, that is close to the money. So 45,100, 45,200, and 45,000 and 44,900. So this is how the development happens. So first of all, I'm taking the example there, let's say, of a gold contract which expired last year on October 5th. October 5th को जो है ना last year वो expire हुआ था. So when is going to be the tender period and delivery period? वो आप जानते हैं, as you have traded in futures contract, it is 5 days before the start or before the expiry date. So let us say if the tender period and delivery period अगर जो है it is on the 1st of October, then what did I tell you? The corresponding options contract will expire 3 days before that. So calculate from 1st of October, 3 days behind, right? And if you calculate backwards 3 days, and I'm discounting the holidays out here, so the corresponding options contract for gold, it ended on 24th of September. Okay. So if it ended on 24th of September, after that, what is going to happen? The next day, the contract will get devolved into futures position. Okay. Once they get devolved into futures position there, they will become all the rules and regulations of the futures contract will become applicable. जो futures के contract के rules regulation है, वो उसमें applicable हो जाएंगे. So within 2 days there, if you want to go in for a cash settlement, अगर आप delivery में नहीं लेके जाना चाहते, तो आप क्या करोगे? 2 days के अंदर आप अपने contract को exercise कर दोगे, क्योंकि आपका contract already in the money है. It has got changed into your futures contract. At the exercise price, at जो आपका strike price था, उसपे आपका contract आपका exercise हुआ. So in 2 days time there, you have to give instruction to the exchange that please settle my contract there, and it will be adjusted. Your profit loss will be adjusted against your mark to market margin. वो उसपे adjust हो जाएगा. वरना आप if you want to take delivery, तो आप delivery ले सकते हो. आपका contract जो है, you will not let it go exercised, right? And it will get into the tender period and delivery period, and all the rules जो भी आपके futures contract में है, that will apply. Now, this is how it happens there in case of options contract. If you devolve the contract, so currently, if you're already trading in crude oil and natural gas, so amongst all the options contract there, crude oil and natural gas, they are not delivery based contract, because even the futures contract are not delivery based contracts. So the previous mechanism that I explained out here, it will not go to the 7th day, it will only go till the 2nd day. There they are going to be cash settled for you, or in case of this the cash settled contracts हैं, gold, silver, crude, zinc, and nickel. All right, you also have the option for going in for delivery. So इसमें क्या होगा? What happens is that how do you determine that these contracts, they are going to be at the money or close to the money, CTM. First, that is going to be determined. So E-4 to E-1, that is before expiry date, 24th of September, that is the expiry. The exchange will prepare a sensitivity report. Exchange एक sensitivity report prepare करती है. उस sensitivity report में क्या होता है कि on the basis that we come across various situations whereby we find कि which are the contracts which are going to in the future on the expiry day, that is on 24th of September, कौन से contract हैं, they will be in the money, at the money, out of the money, right, or CTM, right? They have an estimate. So E-2 say expiry days -2 to expiry day, explicit intimation will be given there to those traders उनके contract ATM or CTM. So expiry day, let us say it is on the 24th of September, then expiry day जो होता है उसका E-2 से लेकर expiry date होता है. So 22nd of September till the 24th of September, report is going to be gone to the broker को report देते हैं. Then E-1 to E day, expiry date -1 to expiry day, that is on the 23rd of September, you will be asked by the exchange there to give devolvement margin. So that will be anywhere between 25% to 50%, because your contract is close to getting exercised. तो उन लोगों को जो ना contract आप मतलब devolvement margin देते हो 25% से 50% के बीच में. E+1 जो है, अब contract expire हो गया on the 24th, E+1 it will get devolved. So then if you want to go in for a cash settlement or a mark to market settlement there, then your balance money there is going to be adjusted there against mark to market, right? And it is going to be paid out there by E+2, right? But then if you don't want that, if you want your contract there to get into delivery mode, अगर आप उसकी delivery लेना चाहते हैं, even delivery is possible there. So you are not going to let your contract exercise. You will not, because it is a futures contract. You will just let it go. You will not square up the contract. और उसके बाद जो है, whatever are going to be the provisions of tender period and delivery period, of course, as futures traders, you already know that, right? So that will be applicable. In case of crude oil and natural gas, nothing like that, because crude oil and natural gas, they are only going to be cash settled. So the earliest margin payout there will happen by E+2, right? So that is what I have explained out here in this slide. So the current contract of crude oil, let's say it is going to expire on the 18th of February. 18th of February to khatam hoga. So correspondingly, the options on futures contract, it will expire on the 16th of February, because the options contract, it expires 2 days before the start of the settlement of the main crude oil contract expiry date. So within 2 days, devolvement happens. It will get converted into a futures position, and that gets settled accordingly. So these are the current 7 contracts there in which we are trading. In options, we have got gold, we have got silver, crude oil, natural gas, copper, zinc and nickel. तो ये 7 कॉन्ट्रैक्ट में भाई हम ट्रेड करते हैं. अभी मैंने आपको बताया कि एक्सपायरी डे इट इज फॉर गोल्ड एंड सिल्वर, it is 3 business days prior to the first business day of tender period of underlying. So 3 days before. In case of crude oil or natural gas, it is 2 days before. तो 2 दिन पहले जो है जब क्रूड ऑयल और नेचुरल गैस का जो फ्यूचर्स कॉन्ट्रैक्ट एंड होगा, उससे 2 दिन पहले जो है ये कॉन्ट्रैक्ट एंड. And then for metals, copper, zinc and nickel, it is 3 business days prior. Underlying price, so of course that you all already will be knowing that in case of futures contract, it is the for gold and silver, it is the ex-Ahmedabad price. So similarly in case of options as well. I already told you that there is European option there, which is currently in place in India. We don't have American options. And strike price there. So for all contracts can be different, and this strike prices can be revised by the exchange from time to time. तो ये time to time जो है ना, जो strike prices आपके वो revise भी हो सकते हैं. अगर आपका गोल्ड का ऑप्शन है, अभी के जो स्ट्राइक प्राइसेस हैं, अभी 15 स्ट्राइक प्राइसेस अबव एटीएम लेवल, 15 स्ट्राइक प्राइसेस बिलो एटीएम लेवल, ये होते हैं. फिर सिल्वर अब ये 25 भी हो सकते हैं. अभी आई थिंक इन द कमिंग कॉन्ट्रैक्ट्स 25 स्ट्राइक प्राइसेस भी अवेलेबल हैं. देन सिल्वर के ऑप्शंस कॉन्ट्रैक्ट में 25 स्ट्राइक प्राइसेस अबव एटीएम एंड 25 बिलो एटीएम, सो टोटल 51 स्ट्राइक प्राइसेस. अभी जो हमारा नया जो नेचुरल गैस और क्रूड ऑयल का जो कॉन्ट्रैक्ट है, तो उनके जो स्ट्राइक प्राइसेस हैं 15 स्ट्राइक प्राइसेस अबव एटीएम एंड 15 बिलो एटीएम. So 31 strike prices and all are available. Then आपका जो tick size है, strike interval है, for gold option it is 100, for silver option it is 250, crude oil it is 50, and for tick size जो आप ये देखिए, that is price movement there for every 1 rupee move, for what is the minimum price movement there in that particular contract. So for gold it is 0.5 or multiples of 0.5. So likewise for all the other commodities, natural gas it is 5 paisa. And once जो initial margin है, that will only be paid by the buyer to the seller. So that is the token margin that I was telling you. So that is going to be paid upfront by the buyer to the seller there, and that is going to be his loss, not more than that. We'll never have a loss of more than that, right? So that is going to be paid upfront. But from the seller side, obviously the risk is going to be on a higher side. So there's a margin that is calculated by this particular method. So what is going to be this is again based on span margin, the report that is generated on a daily basis. So a minimum of 3% subject to margin period of risk, which is currently 3.5% of standard deviation to currently, and computed during software plus 1%. So whatever is going to be the higher. And daily settlement there, as we have told, that MTM gains and losses would not be settled in cash. वो cash में नहीं होंगी. Once it gets into the devolvement mode, devolvement में होता है, तो आपके पास 2 options हैं. If you want to go in for a mark-to-market settlement, it can also be considered a cash settlement also, right? Whereby you get the difference between the settlement price and your strike price. Otherwise, you can get into the delivery. Right. So these are about crude oil options and natural gas जो options के contract हैं, because these are the ones that have been very currently they have been natural gas has been currently launched. So natural gas and crude oil there. These are the main contract specifications, similar to the previous slide, but I'm showing you separately because these two, commodities, a lot of people, they feel they are from the energy sector, so they are interlinked. So interlinked, but right now, these 2 commodities, ये जो 2 commodities हैं, they are not really interlinked. They are separate commodities altogether. Till about 2010, both crude oil and natural gas there, they were interrelated there. They were, the correlation was good, right? But over the emerging last 15-10 years there, that correlation there, it has reduced a lot. So when you talk about trading in crude oil and natural gas, there are some fundamental factors there that you can take care of. जब आप इसमें trade करते हो crude oil और natural gas में, fundamental some understanding there as to what are the factors that impact the price of these commodities. इन commodities को क्या-क्या impact करता है. एक आपका होता है obviously OPEC countries. What are OPEC? So OPEC countries are the one there that produce the crude oil in bulk, right? About 14-15 countries. So they have got an association, उनकी association है, and they decide after every periodic interval कि crude oil whether the production has to be increased or decreased. So if the information comes that the production has to be increased, obviously the supply is going to be on the higher side, so crude oil price tends to fall down. तब crude oil का price नीचे चला जाता है, अगर उनको लगता है कि जो ना वो जो expectation है कि वो crude oil का जो production है वो बढ़ाएंगे. If the information is that they will lower the production there, then obviously the supply is going to be less there than the demand. So then what happens is that the price of crude oil goes up. Then apart from that, changing scenarios in demand from emerging and developing countries. Emerging countries there, for example, they for their development and growth, they import a lot of crude oil, but at times they will all be also hit hard by inflation or some other factors. They might not have as much of production, or the business sentiment is on a lower side, so they will not import as much of crude oil as before. So that leads to what? Contraction in demand. Usse demand आपका कम हो जाता है, and then the crude oil prices it goes down. But on the other hand, if from the emerging economies there the demand also right, then crude oil prices also it goes up. Then apart from that, आपका crude oil will be having its refineries as well. What is the refinery utilization rate? तो मतलब जो है ना, refinery is it working अपना 60% capacity पे काम कर रही है या 40% capacity पे काम कर रही है? If it is working at a lower capacity, what it means is that the demand might not be that very high. Then apart from that, global politics, geopolitical environment as well, it also plays a very important part, because आप देखोगे कि anyway crude oil mostly it is going to be it gets produced from Gulf, right? If it is produced from Gulf, so that area there for the past so many decades, it is politically very heavily influenced, even militarily as well, right? With different world powers trying to control that. बहुत सारे जो countries मतलब जो world power हैं वो उस area को control करना चाहती हैं. And that area is very you can say volatile, right? Lots of wars and conflicts can happen there, right? So उस case में क्या होता है? तो then as someone who trades in crude oil and natural gas, right, will also they will have to take care there of these happenings there which are happening globally. And weather conditions as well, that also impact the prices there of these commodities, especially natural gas, because in the US or in Europe, what happens is that there are so many regions there which are subject to a lot of cold conditions. But in that particular year, if the cold is on a lower side, if it is not as much cold, then what happens is that the demand for natural gas will also come down. So that demand and supply there, it impacts the price of natural gas. If on the other hand the cold is on a very high side, then the demand for natural gas will also grow. Then some other factors that you have to take care of, that if you go to the website of EIA, that is the US Energy Information Administration, right, you will find a lot of very relevant, important information there about crude oil supplies, about natural gas supplies all over the world. So how much is the consumption, how much is the production, कितना consumption, कितना production है, इसके अलावा कौन-कौन सी countries में जो है the demand is on a higher side, then which refineries there the production they are working to the capacity there or not, right? So all that information, very relevant information you will get from this particular site, and people refer to this data which is available out here to make their decision whether to buy or sell crude oil or natural gas. People feel that crude oil and natural gas are correlated there, but that correlation there, it used to exist till about mid of 2000s, 2005, 2007. After that, the correlation there has tended to kind of fall down a lot there, and these two have become basically independent commodities. So ये commodities बहुत independent हो चुकी हैं, because what happens? Why that has happened is that in case of natural gas, the production has increased a lot. If the production has increased a lot, why? Because there are lots of new drilling technologies there that have come into the market, and as a result, there that more of natural gas is getting extracted, these days, and that is independent of crude oil. Okay, and apart from that, we have also seen, and you also have seen that the prices of natural gas there has risen a lot there over the last 10 to 15 years, especially the last 2 years as well, particularly after COVID. I'll come to that, the reason behind that later. बाद में मैं आपको reason उसका बताऊंगा. But natural gas जो है compared to crude oil, they are historically much more volatile. ठीक है, वो ज़्यादा volatile है. आपने last time भी देखा था कि natural gas के contract जो है उसका जो margin था, it went to about 25, 30, 34% there. So why it is going up, right? Why it is so volatile? Because compared to crude oil के comparison में natural gas का जो short term shock है, that is much higher. Okay, so for example, natural gas supply जो है, it will get disrupted there if tomorrow some weather incident happens. Like you would have heard, you will keep on hearing that every year in US there is some kind of a tornado or hurricane that happens, right? And because of that, there's a lot of disruption of supply of natural gas, and that tends to make natural gas prices there much more volatile. So बहुत ज़्यादा volatile हो जाते हैं. Then other factor is that if let's say that crude oil prices keeps going up, अगर crude oil का price keeps on going up there, अगर वो ऊपर जाता है, then obviously the crude oil companies there, they will benefit, right? उनकी profitability बढ़ती है. If their profitability is on a higher side, then they will also invest more in crude oil related projects only and not in natural gas, right? So what happens is that even in that case, the demand for natural gas comes down, the natural gas prices keeps going lower, and the crude oil prices there, they tend to go on a higher side, right? Then these are the dynamics and some other factors very important. In Europe, we have seen that over the last 2 years in certain countries, Netherlands, UK, Italy, वहाँ पे जो है the crude oil prices has risen by 5 times, 6 times. Why? Because of environmental concerns there, they want to get into more safe ways of extracting energy. ठीक है, एनर्जी के और सेफ मेथड्स वगैरह जो हैं उसको मतलब वो अपनाने की कोशिश कर रहे हैं. So in that case, lots of coal mines there to produce electricity, they have now got dysfunction. So जो coal mines हैं, they've got stopped, and they are now looking into other alternative source to produce electricity, and that is natural gas. So that is how the prices of natural gas, the demand has risen a lot. Even after COVID there, because of the lockdown, lots of things there, the demand and supply was not on a very high side. But immediately after the COVID, kind of situation, it sort of stabilized. Then the demand once again rose. Plus this situation whereby so many coal mines there, they were stopped. Then apart from that, the major supplier of gas, this natural gas in Europe there, that is Russia. So Russia also cut down on its production. Russia ने भी अपना जो production उसको cut कर दिया, because the oil pipe, the gas pipe there that was coming from Ukraine, to Poland there and then going to Europe there, that got contracted. There was a contraction in that particular pipe. Apart from that, Russia is also proposing to have a pipe there to Germany, to extend the pipe to Germany, new pipe. But then that particular pipe there, it is subject to the approval of the European authorities. So that approval has not come as yet. So that is also kind of becoming a bit of a challenge there in Europe there to supply the gas there, natural gas, as per the demands of the other countries in Europe from Russia, right? Then there are lots of other political factors as well. It is also felt by let's say that if tomorrow the approval is given, that will also mean that the influence of Russia there over these economies, the Central Asian economies there, like Kazakhstan, Kyrgyzstan there, then there is Azerbaijan, all these Ukraine, it is also going to increase. And US as a superpower might not want that, right? So again, there is a tug of war there. So what I'm trying to tell is that as traders there of natural gas and crude oil, these are the kind of political and military developments there. The information about that, you have to be very much updated about that. Keep on reading a lot of this stuff. Sort of only 2 days back there was this particular information that came in the market that the US is fearing that Ukraine can be invaded by Russia anytime, right? So obviously, and you have also seen that last 2 weeks, what happened is that the government of Kazakhstan there, it was dissolved. It was dissolved there. Why? Because they removed the subsidy there on LPG, right? And as a result, there were a lot of protests in the country, so the government had to be dismissed. So that also people are linking there to the development of what Russia is doing there in Ukraine as well. So everything is going to be linked there, and that impacts the prices of these energy products like crude oil and natural gas, particularly this natural gas in this case. Right. So this we have seen last year. What happened during COVID scenario, that for the first time, पहली बार ऐसा हुआ था, that the price of crude oil that went into the negative. So at that point of time, the volatility was very, very high, right? So higher the volatility, right? Obviously, more was the margin that was asked at that point of time. But if we see what was the reason behind this, the reason behind it was, first of all, COVID situation, right? There was a lockdown, okay, not too much of business happening. Then apart from that, the OPEC countries there, they first decided that we will reduce the supply of crude oil in the market, but then they went back on that decision. They decided to revoke that particular decision. So there were lots of crude oil that was available in the market, right? And the storing of that crude oil was a big challenge. So it went into the negative there. So much of crude oil was available. So all that led to a lot of volatility. Crude oil prices fell like anything, and that led to so much of margin there. For the first time in history, we witnessed that oil prices going into the negative. Then this what this slide tells you is the correlation between crude oil and natural gas, which used to be very healthy till about the mid 2000 levels, right? But if you see there, for the last so many years there, this correlation there, it has tended to kind of fall, right? So these two products there, they are now virtually independent of each other. So the prices that impact crude oil, or the reason that crude oil increases or decreases, might not really impact natural gas as it used to do before, about 10-15 years before. So you see that higher, if you see that the green color, it is on a stronger side, that means the correlation is higher, right? If you see out here, this green, it is falling, right? And in 2013 it was not there at all. 2014 also it was not there at all. 17-18 also it was not there, right? So what I'm trying to tell to everyone out here is that please now study crude oil and natural gas independently, and then take your decisions there, trading decisions. And this is how these prices, they behaved from 2017 to 2020. If you see crude oil and natural gas, crude oil there, well, in this period from 2017 onwards till 2018, there it kept on rising and rising. Natural gas, on the other hand, there it was kind of sideways there, right? Then after that, there was a big steep increase in crude oil, to some extent that in natural gas there in this period around late quarter of 2018. Then after that, both of them fell. Since then, crude oil there, it has been kind of moving sideways, but then natural gas kept on falling, and then there was a bit of an increase there. So means you don't find too much of correlation or link between the price movement of both crude oil and natural gas, right? So study these commodities there, although they both form part of the energy sector, but they have to be studied separately, right? So that is it, from my side, right? And thanks a lot, for your time. I know that, this is weekend there, and still, people have kind of shown so much of interest there in being part of this. I now open, to question and answers there for me.
Yes, sir. Let me post the queries in the chat box over here so that you can
Right.
answer accordingly. Yes.
Yes, sir. So in commodity options there, as I told you, that when it comes to liquidity there, for the last week only, we witnessed our highest turnover ever in options there, which was more than 20,000 crores, right? 22,000 crores if it to be precise there, and that was also matching our the turnover there of even the futures contract. So the thing is that the challenge is going to be, obviously, see, we only started options there about 2 to 3 years back, right? It is going to take it's a market that is going to evolve gradually. For certain contracts there, currently between the bid price and ask price, there is a bit of a difference, right? The gap is on a higher side, but then what our feeling is, that our understanding is that as a when more and more people there will start participating in this market, more and more people there are going to take start trading and come out with different strategies there. Then this gap is going to come down a lot. A lot of you have already witnessed there in stock markets. A lot of you are experienced enough. You see that when options on equities, it was introduced in 2003 or 2004. It is not that options trading, it became an overnight success. It took about 7 to 8 years there for that market there to grow, and after that you saw so much of volumes in options. So by that time there, you had traders there who kind of were familiarizing themselves there to the concept of trading in option. What are the different kind of strategies there that they can use to for price risk management, or even for earning as well, how they can reduce that particular risk. Then when more and more people started getting participated, they started getting active, then you saw that the gap between bid and ask, it kept on getting reduced. And then after that, the volume there, that they just skyrocketed, and then they just kept on increasing and increasing. And that is also what we are also expecting there, even in case of options on commodities as well. It's a product that has been newly introduced there just about 3 years back. And what we have seen is that with gradual awareness about people amongst people there for this particular instrument, right, we have seen that the trading is also increasing a lot. You already saw that in crude oil already we are witnessing a lot of good volume. There's a lot of now the difference between the bid and ask there, it is now reducing there with every passing day. And we expect similar thing there in case of other option products as well, with the coming of even index options, I think, which we are expecting in next few months. Then we'll expect even more vibrancy in the market as well. And that is what what happens in a matured market, that once people become aware of all these derivatives instrument, how futures can be complemented with options, then you'll find that more and more new products get introduced, and you'll find lots of liquidity and volume. So that is what we are expecting. Okay, then I'll take the next question, which is how to select strike price depending on liquidity. Yes, sir. So it will depend on your liquidity and consideration there. How much is the let's say open interest in that, and very important for you is that, sir, how much you expect that the price to go, right? Where you expect, in which direction there the price will go, and to what extent there. So you will have to study the volume along with the open interest there in totality there. So those are two major important statistics there when it comes to knowing which will be the right strike price for you. Also, it will depend on the affordability as well, because on that strike price where there's a lot of volume, the premium tends to increase a lot. Why? Because the demand and supply is much higher on that particular side. Right. If you are able to kind of have that much of premium there, obviously you can go for that. If maybe you feel that the premium is on a higher side, maybe you can look for another strike price. That is not how it happens. Then there's one evening, will the margin required for crude, natural gas, and Bulldex, Metaldex, Energex be reduced in the future? Yes, it can very well happen, madam. I think some Preeti Manish Sharma has asked. It will all depend, madam, because see, what happens in this case, for crude oil, for natural gas, and all these indices there, they are the margin is a direct reflection of the volatility that is there in that particular commodity. If the volatility is going to be on a higher side, that means the risk is also going to be higher, and then the exchange is going to be compelled to ask for a higher margin. If the volatility goes down, then the risk will also go down. The price fluctuation, if it's not very high, then the risk will also go down. So you will see that if the volatility goes down, even the margin that is going to be asked there, that will also be brought down as well. So that can very well happen in case of crude oil, right? It can happen in case of natural gas as well. As I have told you that last year, natural gas even went to the extent where the margin was 34%, right? Why was that? The simple reason was that all the contracts which are traded in MCX, they have a direct correlation there with the contracts there of the international exchanges, because the price discovery out here is more than 90%, 95%, 98% correlation is there. So the gold contract that you trade, silver contract that you trade, the prices match, right? With the leading gold exchange in the world, which is your NYMEX or Dubai Gold and Commercial, Commodity Exchange, DGCX, or other exchanges there. Similarly, in case of ICE there, ICE is the biggest exchange for trading in cotton. The cotton that is traded in MCX there, it has got more than 85% correlation. Even for metals as well, all the metals contracts of MCX that are settled, copper, zinc, aluminium, right? They will be as per the metals which are being traded in the leading exchange, which is LME, the London Metal Exchange. So yes, if the international prices they go down, volatility will also go down there, or they don't fluctuate as much, then you will find that the margin will also go down. Yeah. About KP, somebody was asking what is KP. I do not understand what KP is. हाँ, तो अच्छा ठीक है, एक किसी ने बोला अबाउट ऑप्शन सेल, अगर आप ऑप्शन का सेल करोगे तो कैसे वो जानकारी होना। सो देखिए सर, इसमें क्या होता है, एक आपका ऑप्शन बायर होता है, दूसरा आपका ऑप्शन सेलर होता है। ऑप्शन बायर होता है वो आपको प्रीमियम देता है, तो प्रीमियम आपको जो पहले मिल गया वो आपको मिल गया सबसे पहले, आपको जो ना T+1 में आपका सेटल हो जाएगा। उसके बाद क्या होता है कि फिर बाद में क्योंकि जो सेलर का रिस्क होता है इस केस में ज्यादा होता है कंपेयर टू द बायर, क्योंकि जो ऑब्लिगेशन होती है वो सेलर के पास होती है लेकिन बायर के पास नहीं होती ऑब्लिगेशन, बायर के पास राइट होता है, राइट सेलर के पास नहीं होता है इस केस में। तो ऑब्वियसली तभी इसको प्रीमियम भी ज्यादा मिलता है। तो सेलर का जो है जो मार्जिन जो भी उसको जो देना पड़ता है, जो एक्सचेंज देता है, सो हम स्पैन मार्जिन से इसको कैलकुलेट करते हैं कि ऑन गिवन डे आपका जो है जो रिस्क कितना है आपके पोर्टफोलियो का। तो एक वार मार्जिन का कंसेप्ट होता है, वार मार्जिन के कंसेप्ट से हम ये मतलब जो ना कैलकुलेट करते हैं कि ऑन अ गिवन डे आपका रिस्क कितना है। तो फॉर एग्जांपल ऐसे अगर आपका पोर्टफोलियो 1 लाख रुपीज का है, तो वार मार्जिन के हिसाब से ऑन 1 लाख में मैक्सिमम रिस्क आपका कितना है, फिर अगर वो 15% है तो 15,000 आपसे मार्जिन मनी ली जाएगी। तो 1,15,000 अगर आपका मार्जिन है, दैट मीन्स यू आर कवर्ड फॉर द डे, तो आपसे और एडिशनल मार्जिन नहीं लेंगे। तो इसी तरह की कैलकुलेशन जो है वो रोज होती है, रोज वो रिपोर्ट जो है हम ब्रोकर को भेजते हैं ऑन द बेसिस अगर आपका मार्जिन आता है, मतलब यू विल कम टू नो कि एज अ सेलर दिस इज द मार्जिन देयर दैट आई हैव टू पे। Okay, so yeah, there was one question: can we see base metals, mini futures, and crude mini futures there? So see, currently there, one of the reasons that we stopped was, because of one, liquidity. There was not, enough volume there. But yes, if it is going to be felt there that these contracts are going to make the market, much more, vibrant tomorrow, and there is going to be much more interest there from the participants as well as if the market regulator again allows us, then we can, bring these contracts back. Okay, then there is one question where I get historical data. So, sir, that is available there on the MCX website. In the MCX website, there you have one particular section there. If you go on the top, the homepage, right, there is one information section by the name of market data. If you click on that, right, then there is going to be a lots of information. One of that is going to be historical data. So, any kind of data that you want there on all the contracts which are traded there in MCX, be it index contracts, options on futures contract, or futures contract, you can get all that data from that particular website. Okay, so one question is there any fixed value for premium, or is it a particular percentage of the value of the commodity? So sir, the premium value, it is based on a particular calculation, one particular methodology, but then premium value there, it is based on your Black-Scholes model of calculation of option premium. So option premium there, there are all the exchanges there, they have done one particular methodology. There is a method there, and the most common method there of calculating the options premium there is known as the Black-Scholes model. The Black-Scholes model there, it calculates the premium of the option based on your 5 parameters. One is your strike price. Strike price, we know what it is. Then the other is your underlying price. Then the third, component is your time to expiration of the contract. So whether currently, if the 4th February contract is expiring, how much is the time to expiration? Let's say if it is 20th January today, then the time to expiration is 15 days. After 20th January, the time to expiration will be 9 days. So that is one parameter. Apart from strike price, then underlying price, then there is time to expiration. Then the fourth, component is the volatility, that is the price fluctuation there, the volatility, and the fifth component is your interest rate, risk-free interest rate. So these parameters, they are considered and they are input into this Black-Scholes formula. There are Black-Scholes formula. Initially, it was introduced in the mid 1970s. After that, this formula has got a lot of variations there, a lot of changes, and the current formula that is being used there, that is the Black 76 model. Right, so these are 5 parameters there. They are input in this Black 76 model, and that becomes the base, premium, price. How it is, calculated, and that is also mentioned in your contract specification as well. So I'll just, go through that contract specification. I will just show you. Let me just go to that, to the, website, exchange website. So is the website viewable to all of you?
Yes, yes.
Yeah. Okay. So yeah. So earlier, somebody was asking that, about historical data. So if you go to this, market data, if you go out here, left hand side, you will get a lot of, information about the historical data. So, right. So out here, top gainers, top losers, most active contract, most active put calls, spot market price, historical data. Right. So that is one. The other one was that, somebody was asking about, this, particular formula, how you calculate the options. So you just go to the options out here, and let me pick up the, the gold, right? So gold options contract. Let us take the contract which is expiring there on 2022, the gold option January 2022 contract. So here I told you that, in the slide I was telling that 15 strike prices above ATM and 15 strike prices below ATM. So total 31 strike prices and all. So right now, of course, going forward there are 25 strike prices which will be available for. So this all talks about, the different, parameters there for trading out here. Somewhere also will be mentioned, what is the, how do you calculate the, premium there out here. This is there. So underlying price code, then there are strikes, strike price interval, base price, daily size. Yes, here it is, daily price movement. So the upper and lower price band shall be determined based on statistical method using Black 76 option pricing model and relax considering the movement in the underlying futures contract. So, based on the, how option, the Black 76 option there, you put all those 5, parameters into that, particular formula. Then, it throws a particular figure there, which becomes your option premium. So, that is, how it is, determined. So obviously option premium there, it is going to be based on the volatility of that particular commodity. So that is one factor, right? Okay, so one is asking that, since the options are European style, that means one needs to have a good judgment of commodity movement within the contract period, and that is too long. Am I right? So there can be different, point of views, accordingly, because, in case of the context of the Indian market, to be very honest, when options were initially introduced in India, I think somewhere in 2003, 2004, first in the equity markets, and then in the commodities market. Commodities market, of course, it came very later. But equity markets, earlier we used to have both European options as well as the American options. Okay. But then, later the, market regulator there, that is SEBI there, it disallowed their trading in American options because they felt that it is, a bit, too risky there compared to the European option. And even the pricing methodology there was a bit of a challenge. The Black 76 model that we have, it's a very good, model there for, calculating the European option, based price because of certain assumptions. But in case of American options, it can be a bit of a challenge there at times. And even in case of commodity, because commodity can be a bit more challenging because what you can compare gold and silver cannot be compared with, this crude oil and natural gas. Crude oil and natural gas cannot be compared with metals. Metals cannot be compared, with agriculture, right? So the components which impact the, options of these, commodities there, they can be very, very, varied and different. So there needs to be something uniform there that can fit into, all this, right? And that is where, it was felt with the option models that we have, it will be best suited there for European options there. Obviously, I know that, in case of what you say, you might be having a concern. And that is also, sir, one of the reasons there why, in case of commodities market there, we have this situation whereby on the expiry day, your options contract, they will get converted into a futures contract, right? So, that is one. So to vary it takes us, so what happens is that contract period can be too long. That can also be long in case of an American, option as well. Why? Because, you can have a long-term view. And I told you that one of the components when it comes to pricing the options contract, it is your time to expiry. Okay. So let's say that, today we start an options contract, which is for a period of, 3 months, that is 90 days. So today there are 90 days left for expiry. Tomorrow there will be 89 days left for expiry. After 10 days, there will be 80 days left for expiry. And after 30 days, there will be only 60 days left for expiry. So what it means is that the closer it goes to the expiry, right, your chances of your out of the money, means a loss-making contract, right, becoming a profitable contract is going to be on a higher side. rather than when the timing is very contracted, like low. For example, if let's say there is an option contract which expires tomorrow and you trade today, what are the chances that your out of the money option will become in the money option? A loss making option will become in profit making one. So the chances are more over a longer time frame rather than over a shorter time frame. So that is something there that option traders there, they have to be cognizant. They have to take care of this, all these studies and analysis. Sir, what is the outlook for crude oil and natural gas in the next 2 months? So that is something that, as a exchange, employees there, we can't really kind of tell or, give some kind of trading tips. But maybe that, I already gave you some kind of an indication there as to what are the, factors there, which the fundamental factors which impact the price of crude oil as well as natural gas. So you can make your own, you can say that, study as well as your broker there, today. Right, the Tradeplus they can also come out with those kind of findings and research there to help you in that, right? But obviously, if you are having you can say a very regular traction there with a kind of information that impacts the price of crude oil and natural gas. For example, I was talking to you about the whole this natural gas pipeline there from Russia there to the entire Europe, right? And currently, whatever is the development that is happening in Kazakhstan. So when there is uncertainty, what happens? Does the price go up or does the price go down? Right. So that is, that's kind of, your outlook there. And when things, stabilize, then what is going to happen? Right. Okay. Then there is one, our investors need similar education time and again, because everyone loves, profit. What is happening now? Okay, sir. So the thing is that, that is the reason why we have, arranged for this seminar. Webinar today. I hope that I was able to add value to your time, because I know that I have taken your time from Saturday. a lot of people will be also cursing me for that. But the thing is that I hope that I've kind of given you a little input there, which might benefit your trading decisions there, and how you can trade in options there, and understanding of options per se. So we are open to, sir, to do all these kind of trading sessions. Just for your understanding, we also take trading sessions there on different kind of option strategies as well. Okay, so what are how you can use different kind of options, put option and call option. So a lot of you who are already trading in the equities market might be familiar with things like straddle strategy or a strangle strategy. So there are about 20-25 option strategies alone. If you want there, we can also organize for one session for you for option strategies as well. In the future, there you can get in touch with Mr. Rajesh. We can then kind of organize the session for you for that. Yeah, and apart from that, if you need such kind of awareness session that we are happening today, we can go ahead with that. Yes, sir. Are there Greeks in all commodity option like in index stock options? So those 5 parameters that I was talking about, they are known as option Greeks only. Right. So strike price, then volatility, then this time to expiry there, then the spot market price of the underlying. They are all options on Greeks. There's delta, gamma, theta, vega, rho. They are that. Then there is one, all strike prices are having liquidity or not. If price go high or down overnight, put buyer or call buyer can exit his position there. So yes, the thing is that it is not necessary that all the strike prices will be having a very high element of liquidity. So let me just take the liberty. I will show you one thing for all of you that can be very beneficial. If you go to this option chain, there is this option where you can go to this option chain and you can see that what is the volume of trading that is happening at every particular strike price for that particular commodity. So let's say that if you select say copper, let's say that crude oil, because we are talking about crude oil today and natural gas, and there is this contract for which is going to expire on the 16th of February, right? You click on show, right, and see out here. You have so many strike prices. As I told you that there are 31 strike prices. So see, there are certain strike prices whereby there is no trading that is happening. Okay. But you see out here, if you scroll down, so many strike prices at which so much such active trading is happening. And we have seen that crude oil option over the last 2 months, they have generated so much of volume. So see out here, 6,000, 6,050 unlike gold, where the price interval was 100 after every strike, here it is 50 rupees. So 6,000, 6,050, 6,100. If you see, This is the range, I think, between 6,700 to 6,000, where maximum, trading is happening. So against that, you can find all that, liquidity that is happening. For example, bid and, ask against that, what was the last trading, price, what was the volume that was there, right? So everything is there, you can get in this particular chart out here, which is your option chain. So yeah, it is not that, in every single, strike price there, the amount of the volume of trading will be the same, right? In some strike prices there, it will not be there at all, because maybe that, the market, the people are expecting that the price will never hit that particular level. So they are not wanting to trade at that strike price at all. So if you want to exit your position, you can also take a, a reverse position too as well, right? So if, let's say, you are a buyer of an option, it will only exercise on the last day, then you can square it off there, but by also, selling an options contract, by selling an options contract for that particular commodity. So that is, one strategy that people use. Okay, again, one question. All strike prices are having liquidity now. So it's not that every strike price is going to have, liquidity. Generally, they, strike prices, more liquidity will be there on those strike prices there where people expect that, they will, the price is going to hit that particular level. Yeah. 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 So any more questions? I think, I've answered, all the questions there. So any more questions there, please let me know. I've also, overshot the time, we are 20-25 minutes over. Hope I'm not, eating into, this Saturday time. Yeah. Yes, madam. Yeah. There is a lot of difference between ask and, bid price. So say, yeah, so that is something that, what, that is the reason there why we are having, all these sessions, these, seminars there, webinars, whereby we want to, make people familiar about the kind of benefits that you are going to have if you trade in options. It is a far less risky product there than compared to futures contract. And apart from within, if you are also trading in futures, you can come out with a very different, I mean, so many different strategies where you can trade in futures as well as in options contracts simultaneously. So with more passage of time, with more participation there, you'll find that the ask and bid prices there, they are, kind of narrowing down. So if you see, when we started with the crude oil options contract there about 2 years back, right? Again, we also found that, the bid and the ask price, the difference was on a very high side. But gradually, as and when, there was much more interest there that was generated in this particular commodity, you now find that, the gap has, kind of, gone down quite a lot, right? Obviously, we'll be wanting, more that gap, to reduce even further, but that will only happen with more, active participation once there is much more awareness. And that is what we have seen that, globally in all the other markets as well. Futures contracts, when they get started, then after that, you've got options. Options will take a bit, more time for people there to get, acclimatized, to what options are as a product, right? And once they become familiar, then obviously, sky is the limit, and that is what we are also expecting. And in the coming months, you will also you can also expect many more other commodities also there to be included out here. Apart from that, I also told you that we are also going to expect even in indices, in bull decks, energy decks, and metal decks, options contract to be introduced in the future. Okay, one question. Is there any platform like Sensible in equity option for commodity for analyzing strategies there? So, sir, um, there are, you can say, private players in the market there, which are involved there in kind of, analyzing the, all these, different kind of, strategies. Obviously, commodity options are currently at a very nascent stage. But I know that, there are, platforms like, you can have Reuters and Bloomberg. Apart from that, lots of other, private players who have, kind of, you can say, platform whereby they analyze the different kind of, strategies there that you can use there in, options. Apart, also, for all of your, knowledge, we are going, just like, you would have heard about MCCP, which is our major certification in commodities market. Within 2 weeks there, you will also find that, we are going to come out with a certification on options as well. Options on futures means all those, options contract which are traded on MCX. So that will also give you if you enroll for that, that will also give you a very good understanding about options on futures as a product. Whereby we have also shown various different kind of strategies there for if you trade in options like straddle, strangle, butterflies, and all different kind of thing. But currently, when it comes to analyzing within the exchange, if you mean to say that whether the exchange analyzes different commodity strategies, then exchange right now does not do it. But there are lots of private players there that who do that, and that information you can easily get from the internet. Yeah.
Yes, sir. There is no queries left.
Okay.
Yeah, thank you so much, sir, for conducting this session. Hope this session is a very interactive one. And thank you, people, for joining this session as well.
Hope that it was beneficial for you, and then we can also have many more such sessions there. I
Sure,
told you
sir.
we can have for this awareness, and if you want a separate session on trading strategies and options there, we can also do that as
Sure, sure, sir. Yeah, thank you, sir.
well. Thank you, most welcome.
Let me end the session right now.
Right.
Okay, thank you. Good
Thank you,
night.
sir. Thank you, Team Navia.
Yeah,
Thank you,
thank you,
Sir.
sir. Thank you. Take
Right.
care.
Thank you.